Hello everyone, welcome to TradeX On. Real trades, real capital, no demo, no hindsight. This channel documents my trading journey in real time, wins, losses, and everything in between. I will start with my trade that my stop loss was hit yesterday. This is MU stock. As you know, I started trading my stock up, and after this candle, I was expecting to have a consolidation and some sideways movement of the price. So that's why I decided to put my stop somewhere around here and to leave a little bit more space for the price to go up and down. Unfortunately, the correction that the price made was bigger than I was expecting, and my stop loss was hit somewhere around here. This trade was a 4-hour win trade. I want to show you my statement. As you can see, MU from this stock I have won $119.46. This is a very good trade. I could make a little bit more money if I hadn't put my stop loss here. Maybe today I would put it somewhere here, or just yesterday I should put it here to make under the wall of this green candle to make more money, but this is the reality. I made 4 times more money that I was risking in this trade, and that's my goal, to make more hours when I make profits than the risk that I'm taking. Now the price is moving down again. I'll see what will happen with this stock. For now, I am not interested in it. My stop was hit on LPG a couple of minutes ago. I start trailing the stop under the walls of the candles the day before the opening of the market. I put the stop loss under the wall of this doji bar, and as you can see, the price went under the wall and it hit my stop loss. I am with realized $72 in profit. Maybe some of you could say that I should leave more room for this trade to happen and to develop, but that's what I decided. So from these two trades, I am 6.4 hours in profit. Stay until the end of the video and I will tell you more about what I mean by these hours and why I am talking in hours and I'm not talking in money. Here are some stocks that I'm watching at the moment. I have placed on some of them pending orders to buy the stocks if the price breaks on the previous day highs. As you can see on LAHC stock, I have put a pending order to buy on 21.95. Excuse me, my stop loss is on 21.10, and I am expecting the price to break through the high of this red candle from yesterday. This is the candle from today, and it is in the range of the mother candle.
Order filled.
At the moment, one of my pending orders was hit. As you can see, I am already in this trade. BEAM. This is a stock that I has put a pending order here, and it was hit at the moment. I had a notification just a seconds ago, so we are now live trading with you this stock. I'm trading this stock with you, of course, but I'm glad that this order was activated during the recording of the video. This talk was interesting before the start of the session, but now I'm no longer interested in this talk because the price opened with a gap up and I don't have opportunity to uh, take a trade here. So I will remove this trade. Here on this stock again, another candle, an inside bar, and inside candle, and this is uh, today's candle that opened with a gap up. And when the candle opens with a gap up, I'm not so satisfied because usually I want the candle that I am expecting to make the break of the previous height to start somewhere inside the range, because now, as you can see, the price is dropping down, and when the price opens with a gap up and start to drop down, I'm not so satisfied, and I don't want to take part. I'm more cautious because it is showing weakness at the moment, and I don't want to buy this weakness. Here, almost the same thing. The price opened with a gap up and start dropping down. So this is again a weakness that I don't want to be part of. This is another pending order that I have put. I'm waiting to see if the today's price will break through the high of the yesterday's candle, and here my order will be activated. Here is the stop loss. Again, another stock that I don't like this kind of setup when we have a mother bar, an inside bar, and a gap up opening. This opening should be inside this range. So I want, in this case, I would try to take a buy position. Another opening in the range, and here I have put my top order. If the price comes to here, I will be in this trade and my order will be activated. As you can see, a mother candle again, uh, an inside candle, and here is another inside candle that is forming for now, and I'm expecting it to go up. Again, I'm not interested in this stock anymore because we have an opening with a gap up, and this gap is above the high of the previous candle. So I don't want to take part in this stock because the risk to reward ratio that I would be expecting to won't be so good. If the price opened somewhere here, it would be a very nice setup, but unfortunately the price opened with a gap, so I'm not participating in this stock. Now I want to tell you something more about ours. Here is a picture that I made for you. As you can see, we have an opening price and a stop loss. Imagine that we are in a trade and we are entering the trade at this level, and we put our stop loss here. This distance between the opening price and the stop loss is our risk. This is 1R. Risk R means risk per trade or position. And you know that in my trading strategy, 1R equals 0.5% from my account, and every trade that I make, I'm risking 0.5%. It's very important to stay disciplined and not to increase your risk, because we don't know what will be the result of any of the trades that we are taking. As you can see, the price comes here. After we open the trade, we will be 1R in profit, or we will increase our capital with
Orfeld.
0.5%. Here we will be 2 hours in profit, or we will be 1% in profit. Here we will be 3 hours in profit, etc. So this is the so-called R, what I'm talking constantly about. And just a second, another trade was activated. Let me see which one. Here. So currently I'm in two open positions on BEAN and OUST. This is LPG is the ghost trade from today. That's why it is shown here. And we'll see how these trades will develop. So let's go back on this image. R, as I told you, simply means how much you are willing to lose on a single trade. For example, if I risk $30 on a trade, that amount represents 1 R. If the trade hits my stop loss, I lose 1 R. If the trade makes $60, that's plus 2 R. If it makes $120, that's plus 4R. So instead of thinking in dollars, I think in units of risk. And this is extremely important, because trading is not about how much money you make on one trade. It's about consistency over a series of trades. Now, here's why thinking in R is better than thinking in money. If you focus on money, your decisions become emotional. Losing $30 feels different from losing $300, even if both represents the same percentage of your account. But when you think in R, everything becomes standardized. A loss is just minus 1R. A win is plus 2R or plus 3R or plus 4R. This removes emotion and helps you stay disciplined. The same applies to percentages. If you risk 0.5% or 1% of your account per trade, you're protecting your capital. Because even if you have a series of losing trades, your account won't be heavily damaged. For example, 5 losing trades at minus 1R each is only minus 5% if you risk 1% per trade, and only minus 2.5% if you risk 0.5% per trade. That's manageable. Now, this connects directly to something called risk to reward ratio. This is simply how much you are risking compared to how much you are aiming to make. For example, if you risk 1R to make 2R, that's a 1 to 2 risk to reward ratio. If you risk 1R to make 3R, that's 1 to 3 risk to reward ratio. This is important because you don't need to eat every trade to be profitable. Even if you lose more trades than you win, as long as your winners are bigger than your losers, you can still grow your account. And here is the key idea. You don't need to be right all the time. If you lose 3 consecutive trades and you lose minus 3R from them, but then you catch one trade at plus 4R, you are still in profit. So the goal is not to be right every time. The goal is to control your risk, stay consistent, aim for good risk to reward setups, let your winners run, and keep your losses small. In short, think in R, think in percentages, not in money. Because money creates emotions, R creates discipline. As you saw on my account, I had consecutive losing trades, but only with the last three trades that were in profit. I covered all my losses and I am already in profit. So, very important is to start to thinking in percentages and hours instead of thinking in money, because when your account is small, it's no deal to lose 30 or 40 or $50, but when you start to increase your capital and you start to lose more money because no one is consistently profitable, and every trader is losing money, and every trader have consecutive uh, losing trades in a row, and when you start to lose 300 or 500 or $1,000 in a trade, and you start to see these numbers in red, then you start to panic, and emotional trading is a bad thing. Trading should be based on discipline, and you should control your emotions. And the easier way to do this is to think in hours and in percentages. This is TradeX on. Trading is not about being right every time, it's about managing risk and staying consistent. If you want to follow the journey, subscribe, and I will see you in the next one.